Today we'll be looking at 4 charts with technical analysis. First is USDCHF, second is natural gas, third is US 100, and fourth is Walmart. My name is Angelos Zitis, and this is the Looking at the Charts report for the 19th of May. Starting first with USDCHF 4-hour chart. Now the currency pair has suffered from the recent weakening of the greenback and in our view has been in a downward momentum since the 16th of May. If this trend is to continue, we could see the S1 0.9725 support being engaged as it was on the 4th of May for the last time. Lower we note the S2 0.9665 support and the S3 0.9590 line, which were both tested back in April. If the trend turns upwards, we could see the R1 0.9830 resistance being engaged first. Higher, the R2 0.9910 stands as our second resistance, while at the top we note the R3 0.9975 barrier. Our personal view is for a selling trend, and it could also be supported by the RSI indicator below our chart, which is currently below the 30 level, implying an oversold position. Today, we get the US initial jobless claims weekly figure and the US existing home sales figure for April, both considered as interesting in our opinion and could move the currency pair. We move now to natural gas 1-hour chart. Natural gas has been trading upwards since the 10th of May, but seems to have lost some ground in the most recent hourly sessions, dropping below the 8.15 level and turning it into a resistance. If this trend persists, we could be seeing the S1 7.95 becoming a target for traders. Lower, the S2 0.75, which was last briefly tested on the 16th of May, could be the next target in a bearish momentum, while even lower, the S3 0.53 is our final support. In case the bulls take over, we may see the R1 8.15 resistance coming into play. We also note the R2 8.40 level, which was used various times in the past days. At the top, we place the R3 8.65 line as it may be used in the scenario of a strong buying interest. The RSI indicator has fallen to the 30 level in the past hours, providing evidence for more traders probably being on the sell side for now. Traders may need to watch out for the EIA natural gas weekly storage levels coming up today, the 19th of May, in the US session, as they can move prices accordingly. On fundamentals, we note the Russian war in Ukraine as a very hot subject for the natural gas prices, and traders should keep an eye on developments of natural gas trade between Russia and Europe at this stage. We move now to US 100 daily chart. Our opinion is that the index remains in a selling momentum since the end of the previous March. As the trend may be ongoing, we currently see the price action nearby the S1 11,575 support level without clearly engaging it, however. If the selling continues, we note the S2 10,915 level and even lower the S3 10,165 barrier. On the other hand, if a move upwards is to prevail, we could see the R1 12,605 barrier coming into play. With a possible move towards the R2 13,565 level standing higher, we could be getting some proof of stabilization from the market, while a breach of the R3 14,295 could even signal bullish interest. The RSI indicator below our chart has rebounded off the 30 level, but has once again turned downwards in the past days, giving the notion that the selling positions are in excess for now. Our final choice is Walmart's 4-hour chart. Walmart has been among the US retailers who have suffered badly in the current week, making consecutive gaps lower. Of course, for the same reason, this is an interesting move. If the bearish sentiment persists, we note the S1 117.35 support as the most probable first stop. Please note the S1, even lower the S2 112.80 and the S3 108.75 are all levels seen for the last time back in 2020. However, if the bulls are to take over, we could be in for a move towards the R1 124.80 initially, while if the trend strengthens, traders can also consider the R2 129.90. Our personal outlook for the stock remains downwards, while the RSI indicator has dropped to the staggering 13 level, highlighting the sell-off by traders.